If you thought gold's drop was shocking, wait until you see what's happening to silver right now. Because today's move isn't just a normal dip, it's a sharp, aggressive sell-off that's catching a lot of investors off guard. Right now, silver is trading around $73 per ounce, and in just a single session, it's down over 3%. That's a massive move for a metal that many people think of as stable. But it gets worse when you zoom out. Over the past 5 days, silver has been steadily bleeding lower. And over the last month, it's down more than 8%, almost mirroring the pressure we've seen in gold. Now here's where it gets interesting. Even after this drop, silver is still up roughly 7 to 8% year to date. So what does that tell you? This isn't a simple collapse. This is a market that went extremely high, extremely fast, and is now going through a violent correction. And if you understand how silver behaves, this kind of move shouldn't actually surprise you, because silver has always been different. Unlike gold, which is mostly a safe haven asset, silver sits in a very unique position. It's both a monetary metal and an industrial metal. That means it reacts to two completely different forces at the same time. On one side, it moves with investor sentiment, interest rates, and the US dollar, just like gold. But on the other side, it's deeply tied to global industry. Things like solar panels, electric vehicles, electronics, and manufacturing demand. So when markets get unstable, silver doesn't just move, it swings. And right now, we're seeing that volatility play out in real time. Because at the exact same moment silver is falling, oil prices are surging. We're seeing crude pushing above $100 per barrel, rising sharply in a short period of time. And that's creating a ripple effect across the entire global economy. Higher oil means higher inflation pressure. Higher inflation means central banks, especially the Federal Reserve, are forced to stay aggressive. And that changes everything for metals like silver. At the same time, geopolitical tensions are still sitting in the background. Markets are trying to price in uncertainty, but also reacting to sudden shifts in expectations. And silver, being the more volatile cousin of gold, is taking a bigger hit. But to really understand what's happening right now, you need to zoom out. Because just a few months ago, silver wasn't falling, it was exploding. We're talking about one of the most aggressive rallies in modern market history. Silver surged from around $30 levels all the way past $100 and even touched near $120 at its peak in early 2026. That's not a normal move. That's a parabolic rally. And when markets go parabolic, they don't correct gently. They snap back hard. And that's exactly what we're seeing now. From that peak, silver has dropped sharply back into the $70 range, wiping out a huge portion of gains in a very short time. So now the big question becomes, why is this happening right now? Why is silver dropping even while global tensions remain high and inflation risks are rising? Is this the end of the bull run? Or is this just a temporary shakeout, the kind of move that scares out weak hands before the next major move higher? Because here's the truth. Moments like this are where smart money starts paying very close attention. In this video, we're going to break everything down step by step. What's driving this drop? Why silver is falling harder than gold? What major voices in the market are saying? And most importantly, what could happen next in 2026? Before we move forward, make sure to subscribe to the gold and silver updates and like the video if you want real, clear breakdowns of gold and silver markets without the noise. And I want to hear from you as well. Are you buying this dip in silver? Or staying on the sidelines right now? Bullish or bearish? Let me know in the comments. Because in the next part, we're going straight into the real reasons behind this silver crash. And trust me, once you see the full picture, this move will start to make a lot more sense. Alright, let's get straight into it. Silver didn't just drop randomly. There are very specific forces behind this move. And once you understand them, the entire picture becomes much clearer. Because right now, 4 major factors are hitting silver at the same time. And when all of them align together, you get exactly the kind of sharp move we're seeing today. Let's start with the first one. The biggest driver right now is the combination of a stronger US dollar and the oil shock happening in the background. As oil prices surged past $100, it immediately triggered inflation fears across global markets. And when inflation fears rise, something very important happens. The US dollar strengthens. Investors rush into the dollar because it becomes more valuable in high inflation environments, especially when energy prices are rising fast. Now here's the problem for silver. Silver, like gold, is priced in US dollars. So when the dollar gets stronger, it automatically makes silver more expensive for buyers around the world. And that reduces demand in the short term. But silver gets hit even harder than gold here. Because silver isn't just a safe haven asset, It's also tied to industrial demand. Higher oil prices increase production costs globally. That can slow down manufacturing, reduce industrial activity, and create fears of weaker demand for things like solar panels, electronics, and electric vehicles. So silver gets pressure from both sides, currency pressure and industrial pressure. Now let's move to the second reason, and this one is just as important. The shift in expectations from the Federal Reserve. Just a few weeks ago, markets were expecting multiple rate cuts in 2026. That was one of the biggest bullish drivers for gold and silver. Because lower interest rates weaken the dollar and make non-yielding assets like metals more attractive. But then, everything changed. Oil surged, inflation concerns came back, and suddenly, the Fed had to take a more cautious, even slightly hawkish stance. Now, instead of multiple rate cuts, some analysts are expecting maybe one, or in some cases, no cuts at all. And that's a huge shift, because higher interest rates increase the opportunity cost of holding silver. Investors start moving money into bonds and yield-generating assets instead. And silver, being more volatile, gets sold off faster. Now here comes the third reason, and this is where things start getting aggressive. Forced liquidations and profit-taking. You have to remember, silver didn't just rise, it exploded. We saw a massive rally from around $30 all the way to nearly $120. That's over a 3x move. And during that kind of rally, a lot of traders enter with leverage. Big positions, high risk. So when the price starts falling, it doesn't just fall naturally, it triggers margin calls. Positions get liquidated automatically, and that creates a cascade effect. More selling leads to more selling, and before you know it, the market drops much faster than expected. At the same time, institutions that bought early start locking in profits, because after such a massive rally, taking profit isn't just smart, it's necessary. Now let's talk about the fourth and final reason, and this is something most people completely miss. The difference between the paper market and the real physical market. Most of the sharp moves you're seeing right now are happening in the paper market. Futures, ETFs, short-term trading positions. That's where the volatility is the highest. But when you look at the bigger picture, the long-term fundamentals of silver haven't actually changed much. There's still strong demand from industries like solar and EVs. There are still ongoing supply constraints. And silver has been running in a structural deficit for years. So what you're seeing right now is not a collapse in the core story. It's a short-term reaction driven by macro pressure and market mechanics. And that's a very important distinction, because it changes how you interpret this move completely. So to sum it up, silver is falling right now because of four key reasons. A stronger dollar driven by rising oil prices, a more hawkish outlook from the Federal Reserve, heavy profit-taking after a massive rally, and aggressive selling in the paper market. Put all of that together, and you get exactly the kind of sharp correction we're seeing. But here's where it gets really interesting, because in the next part, we're going to look at what major voices in the market are saying right now, and whether this drop could actually be setting up the next big move higher. Before we move forward, make sure to subscribe to Gold Silver Updates and like the video so you don't miss what comes next. And tell me this, which of these four reasons surprised you the most? Because once you understand what's really driving the market, you start seeing opportunities where others only see fear. Now here's where things start to get really interesting. Because while the market is reacting with fear right now, some of the biggest voices in the financial world are not panicking at all. In fact, many of them are looking at this exact drop as something very different. Not the end of the move, but a setup for what could come next. Let's start with one of the most well-known gold and silver advocates, Peter Schiff. Now, if you followed him for a while, you already know his stance. He's been consistently bullish on precious metals for years, and during sharp corrections like this, he doesn't see weakness, he sees opportunity. His argument is simple. The core reasons for owning gold and silver haven't gone away. If anything, they've become even stronger. We're still dealing with massive global debt, ongoing currency devaluation, and long-term inflation risks that haven't been solved, only delayed. From that perspective, a drop like this isn't a warning sign. It's a reset, a shakeout of weak hands before the next move. But he's not the only one thinking this way. A growing number of analysts and institutional voices are starting to point towards something bigger happening in the background. And that is the gradual shift away from fiat currencies, toward hard assets. We're seeing central banks continue to accumulate gold at elevated levels. We're seeing countries diversify away from the US dollar in global trade. And we're seeing more attention being placed on real, tangible assets that can't be printed. Now, silver plays a very interesting role in all of this because, unlike gold, silver has a supply problem. For several years now, the market has been running in a structural deficit, meaning more silver is being consumed than produced. And a huge part of that demand is coming from industries that are only growing: solar energy, electric vehicles, advanced electronics. This isn't temporary demand. This is long-term structural demand. So while short-term price action looks weak, the long-term pressure underneath the market is still building, and that creates a very unusual setup because you have short-term bearish forces fighting against long-term bullish fundamentals. Now let's talk about where price could go from here, because this is the question everyone wants answered. In the short term, volatility is likely to continue. Silver doesn't move slowly. It overshoots in both directions, so it wouldn't be surprising to see more swings, more sudden drops, and sharp bounces along the way. But if the pressure from the dollar eases, if rate cut expectations return, or if geopolitical risks escalate further, silver can reverse very quickly. And when it moves, it doesn't give much time. Now, looking at broader projections, some analysts still believe silver could revisit much higher levels, potentially moving back toward the 90, 100, or even higher zones over time. Not in a straight line, but through phases, sharp rallies, pullbacks, and then continuation, because that's how this market behaves. And if the gold to silver ratio starts compressing again, that could act as an additional boost for silver's upside. So what you're seeing right now could actually be one of those key moments where the market is uncertain, sentiment is weak, and price is pulling back hard. But underneath that, the long-term story hasn't broken. And that's exactly why experienced investors pay close attention during times like this. Because these are the moments where positioning happens quietly, before the next big move becomes obvious to everyone. In the next part, we're going to take this one step further. We'll break down different scenarios. What happens if silver continues falling? What happens if it stabilizes? And what could trigger the next explosive move higher? Before we move forward, make sure to subscribe to Gold Silver Updates and like the video to stay ahead of these market shifts. And I want to ask you this: do you think silver has already bottomed? Or do you expect one more drop before the next rally? Let me know in the comments, because the next move could define the rest of 2026. Now let's take this one step further. Because at this stage, it's no longer just about why silver is falling. It's about what happens next. And to understand that clearly, you need to look at the market in scenarios. Not predictions, scenarios. Because silver doesn't follow a straight path. It reacts to conditions. So let's break this into 3 possible paths from here. Scenario 1. Continued drop before a real bottom. This is the short-term bearish case. If the US dollar continues to stay strong, if oil prices remain elevated, and if the Federal Reserve stays hawkish longer than expected, then silver could face more downside pressure. In this scenario, what you're looking for is continued weakness in momentum, lower highs, more selling on rallies, and possibly another leg down before a true bottom forms. Because after a parabolic move like we saw, markets don't always bottom immediately. They tend to flush out remaining buyers, shake confidence, and only then stabilize. So yes, another drop is completely possible in the short term. Scenario 2. Sideways consolidation, the calm before the move. Now, this is actually one of the most important scenarios, and the one most people ignore. Instead of crashing or rallying immediately, silver could enter a phase where it just moves sideways. Volatility drops, price stabilizes, and the market starts building a base. This is where smart money usually operates quietly. Accumulation happens here. Not during hype, not during panic, but during boredom. Because when silver stops making dramatic moves, most retail traders lose interest. But that's often when positioning is happening behind the scenes. And historically, these consolidation phases are what lead to the next big breakout. Scenario 3. Sharp reversal and explosive move higher. Now, this is the bullish case, and with silver, this kind of move can happen very fast. If we see any of the following, a weaker US dollar, renewed expectations of rate cuts, escalation in geopolitical tensions, or a sudden surge in investment demand, silver can flip direction aggressively. Because once selling pressure dries up, there's usually not much resistance left on the upside, and when buyers step back in, the move can be sharp, fast, and unexpected. This is why silver is known for its explosive rallies. It doesn't slowly climb, it jumps. Now here's something very important you need to understand. All three of these scenarios are possible, and the market will choose based on incoming data and global events. But there are key signals you can watch to stay ahead. Watch the US dollar. If it starts weakening, that's a major green signal for metals. Watch interest rate expectations. If markets begin pricing in more cuts again, that's bullish. And watch momentum. If silver stops falling despite negative news, that's often an early sign that selling pressure is exhausted. Because markets don't turn when news turns, they turn when selling runs out. And that's a critical distinction. So right now, we are in a transition phase, from a massive rally into a sharp correction, and potentially into the setup for the next move. This is where confusion is highest, but also where opportunity begins to form. In the final part, we're going to bring everything together. We'll answer the most important question. Is this a buying opportunity or a warning sign? And what should you actually be watching going forward in 2026? Before we move forward, make sure to subscribe to Gold Silver Updates and like the video so you don't miss the final breakdown. And tell me this, which scenario do you think is most likely right now? More downside, sideways, or a sudden breakout? Because your answer says a lot about how you see this market. Now let's bring everything together, because after everything we've covered, the drop, the reasons behind it, expert opinions, and the possible scenarios, it all comes down to one final question. Is this a buying opportunity or a warning sign? And the honest answer is, it depends on how you're looking at this market. If you're thinking short term, then yes, this environment is still risky. Volatility is high, the US dollar is still strong, and the Federal Reserve hasn't clearly shifted toward rate cuts yet. That means silver can still move unpredictably. Sharp drops, quick bounces, fake breakouts. This is not an easy market to trade in the short term. But if you zoom out, the picture starts to look very different. Because the core drivers behind silver haven't disappeared. Global debt is still rising. Currencies are still under pressure. And inflation, even if it cools temporarily, hasn't been fully defeated. At the same time, silver's industrial demand is not slowing down long term. Solar energy expansion, electric vehicles, advanced technology, all of these require silver, and supply is not keeping up at the same pace. That imbalance doesn't fix itself overnight. So what you're seeing right now is not necessarily a broken market. It's a market going through a reset after an extreme rally, a cooling phase, a shakeout. And these phases are uncomfortable because they create doubt. They make people question the trend. But historically, this is exactly where long-term trends either continue or truly break. And right now, there's no clear evidence that the long-term story has broken. What we do have is a market that got ahead of itself and is now correcting. So instead of asking, is silver crashing? A better question might be, is this a temporary correction within a bigger trend? Because the answer to that question changes everything. Now here's what smart investors focus on during moments like this. They don't chase hype at the top, and they don't panic at the bottom. They watch, they wait, they look for confirmation. They pay attention to signals, the dollar weakening, rate cut expectations returning, momentum stabilizing. And when those signals start aligning, that's when conviction builds. Because in markets like silver, the biggest moves often happen when the majority is still uncertain. And by the time it becomes obvious, the move is already well underway. So whether you're bullish or cautious right now, the key is awareness, understanding what's driving the market, and staying ready for what comes next. Because one thing is certain, silver is not a quiet asset, and when it moves fast. Before we close, make sure to subscribe to Gold Silver Updates and like the video if you want clear, real-time breakdowns of gold and silver without the noise. And let me ask you one final question. Are you preparing for the next move or waiting for confirmation? Let me know in the comments, because 2026 could be a defining year for precious metals, and the decisions made during moments like this often matter the most.